So AIB was licensed as a stockbroker by the Capital Markets Authority about 1995. Those days it was in the name of Ashbull Securities. Around 2005, the current shareholders bought into the company and have begun a transformation of the company, which resulted in the rebranding from Ashbull Securities into Africa Investment Bank and then into AIB Capital. AIB Capital is licensed by the Capital Markets Authority as a stockbroker, and we participate in 3 key areas, which is stockbroking. We are a member of the Nairobi Securities Exchange, and we're facilitating buying and selling of shares at the stock exchange on behalf of our clients. Our clients who are both retail, high net worth individuals, local institutional pension schemes, and also foreign clients who we also do business for. We are also a bond trade. We also trade bonds on behalf of our clients, both institutional banks and institutional clients. The bond market is principally institutional, but we also do corporate finance advisory, where we advise clients who are looking for alternative sources of funding outside the conventional bank lending model. So people looking for equity funding and are looking to get people to inject money into their companies. We advise them, we do the valuation, we do the information memorandum, and we actually do the sourcing of the funding for that purpose. It's a significant injection. And as I said earlier, one of the biggest challenges that we've had is that the slowdown in government projects, because as much as we've been talking about the big 4, not very much has been happening on the ground in terms of actual construction of the houses, in terms of the growth in the manufacturing sector. Although some things are being done, the money will enable now actual movement on the ground, which should then be able to begin to reflect some spur in the economy. Yeah, so that's a very encouraging development. Yeah, but I think in the overall size of things, it's not really that much. So 500 billion for the kind of projects that they are looking, they still need a lot more funding to effectively implement those projects. The key thing about it is that it spurs greater savings, and savings that are directed specifically towards housing development. So that for the capital markets, when you get a bigger pool of savings, the capital markets are what provide the channel that enables the movement from savings to investments. So when we grow our savings, we encourage that should be able to enable. I think there will probably be some other developments coming around that, in terms of perhaps looking at the development of asset-backed securities, mortgage securities, and bonds that will be able to finance the housing projects. Yeah, so that will be a benefit to us. I have no doubt that the market has the capacity to take this. If you look back to history, to the time when perhaps our market was doing quite well, it was a time when the government had the biggest push towards selling its companies on the market. We had Kengen, Kenya Re, Safaricom, all coming up in a row. And from there on, that actually even sparked the private sector to also begin listing. We had Copbank, Britam, and KCB, and a few others also then coming in. So in my opinion, that's a very good move, because the government needs to lead. the rest of the economy in investing. And there's a lot of publicity on the market that comes around whenever there's an IPO. So people who have a share trading account, which has been dormant, then there is advertising, oh, Safaricom is coming to the market, oh, NOC is coming into the market. They'll pick up the phone and call their stockbroker and say, what do you think about this share? So they effectively pull back people who have perhaps been dormant in the market to come back into the market. But if you look at what happened with Safaricom, 40 billion, oversubscribed 3 or 4 times, that was 8 years ago. That capacity is still here in this market, and probably even bigger. The growth historically has been encouraging, but the potential is greater. I mean, we still talk of a savings rate in Kenya of 13-15% somewhere. China talks of 40%. Most growth economies grow by getting their savings rate much higher than what we have today. And we need to get there. So the proposal, there's an important need to increase pension penetration in Kenya so that we have just about everybody on a pension scheme. And the proposal that was there was to have the NSSF as the first tier, increase the contribution of NSSF to 6%. However, they should allow people who have private pension schemes to opt out of NSSF, because everybody's going to retire. Nobody can say they are not going to retire. I mean, improve the efficiency of NSSF. I think there is room to do that, and I think make it mandatory for those who do not have their own pension. It should be made mandatory, but if you have a private pension scheme, so if in your company, you are allowed to opt out of the mandatory one. But if you don't have, then you have to go to the mandatory one. That will spur growth in the pension sector. That will increase our savings rate tremendously, and that will will have a very positive impact on our capital markets and even on growth in the economy. Yeah. So when government says they are looking for money for these big four, if you increase the savings rate, then that's where the money is going to come from. There is a realization that there is value in getting expert advice in managing your wealth, perhaps because of the greater risks that have come in the economy. People have lost money, have made 1 or 2 wrong decisions, and increasingly people are appreciating the importance of expert advice in managing their wealth and understanding the risk, analyzing the risk involved in certain investments, and understanding that investment is a profession like any other profession, and that there are people who study for very many years to become experts in that. It's the same way, you say you can't treat yourself. You go and see a doctor. So this is your money doctor. You need to go and see your money doctor, and your money doctor can, at least, in the very least, explain to you the risks that you're getting into, and the possible benefit, and any possible things that could go wrong in the past, so that you go into the investment from an informed position.